A lot of the things you said have all happened, and it's because you've been a believer in Elon Musk.
He believes that digitization and autonomy is going to be driving the future, and he thinks we're on the verge of having an era of incredible abundance. So he's setting it up for that. And then in addition to that, what he believes is that in order for the planet Earth to survive, that America has to be militarily strong. And the only way you can be militarily strong is you can't be financially weak. So what he's trying to do is set it up so that you'll be financially strong, and then you can be militarily strong, and that's going to protect the planet, he believes. And I agree with that.
Tesla just dropped 15% in a single day. That kind of move rattles investors, especially when the stock is already down more than 50% from its peak. On the surface, it looks like trouble. But Ron Barron doesn't see trouble. He sees timing. He's been one of Tesla's earliest and biggest supporters. He's made billions from those decisions. And even now, after all that growth, he believes Tesla has barely scratched the surface. While most people are watching price charts, he's watching what the company is building. This goes way beyond electric vehicles. Barron sees Tesla shifting towards something much larger, a transportation platform built on full autonomy. He's talking about a future where Tesla keeps the cars instead of selling them. A fleet of self-driving vehicles owned by the company, generating income every day, year-round. He breaks it down simply. Each car could bring in $30,000 to $50,000 a year in revenue. 1 million cars doing that creates $30 to $50 billion in annual profit. Not potential, profit. That completely changes how Tesla's value should be calculated. And this isn't speculation. Tesla already has the software in place. The factories are running. The tech is improving. The gap between Tesla and everyone else in terms of scale and efficiency keeps getting wider. Barron believes the company is entering a new phase, where traditional metrics don't capture what's really happening. He also makes a point that most analysts ignore. He sees current market volatility as part of a broader reset. Government policies, inflation control, election cycles, they're all affecting sentiment. But they don't change Tesla's ability to execute. They don't slow down the roadmap. They don't erase the billions Tesla could make from energy, AI, or mobility. For Ron Barron, the path forward is clear. Tesla isn't reacting to the market. It's building the next version of it. A version where vehicles don't just move people. They power an entirely new stream of income. And in his view, that shift has already started. Let's break down why this matters, and why Barron thinks now is the time to pay attention.
These two investments represent about 15% of our assets, about 10% for Tesla, 5% for SpaceX. I watched this with puzzlement, everything that's happening, but I think that one element that is going to be important for Elon is that he will be able to, he understands where there's unusual spending that's much greater than it should be, and how that can be corrected. Pretty easy, actually. You have a lot of cost-plus contracts, so that can be changed to the way contracts work for SpaceX, where they take the risk instead of the government. So cost-plus contracts are anathema to operating.
I'm sorry, what was that?
What's the word? They're a bad thing. Cost-plus contracts don't work very well for the person who's contracting. Is that you agree to do services for the government, they give you a price, and then you go out there and find a lot of subcontractors to do this work for you. The subcontractors, the longer they take and the more they cost, the better it is for you, because you're getting 12% off the top as pure profit. Just as a prime contractor, you want things to cost more. So for example, the government was sending a program, they want to send people back and forth to the ISS, International Space Station, so they give two contracts, I guess about 10 years ago. One to Boeing for $4.3 billion, a year later to SpaceX for $2.1 billion. And SpaceX has since been back and forth 40 times. Boeing got there once and they couldn't get their guys back.
Right.
So we had to go rescue them. And that contract now has cost $18 billion. It's going to cost $98 billion or $88 billion. It's supposed to cost 11. And therefore, they benefit by something taking longer and costing more. SpaceX, if something goes wrong on a Friday afternoon, at 4:30, people don't go home until it's fixed. The other places, 4:30, let's get out of here. And they don't care because it's the government's money, not theirs. You've got to launch regularly in your sites regularly, like a lot of times every day. And if you have to go get permits every time you launch, airplanes don't have to get permits every time they launch, every time they take off. If you have to do that, that really slows you down. You can't do it. So basically, there has to be change in regulations also. So there have to be more reasonable regulations than are in place right now, and you have to have different, this cost plus contract stuff has to go. I think that he had similar views to mine. I don't feel like I'm a Democrat anymore, but he had similar views to mine, and for a long time. But I think that the Democratic Party has been taken over by unions, teachers' unions, UAW. I mean, one of the things that was really interesting is that they had an EV summit at the White House. Everyone's been talking about this a year or two ago, and in that period, they had the leading people for electric cars were invited to the White House to meet with President Biden. And Musk was invited initially and then disinvited. And the person who was praised for leading the way and in the conversion was Mary Barra. I love Mary Barra, but Mary Barra in that quarter did 29 cars, 29 electric cars. We did 300,000. And she was the one who was invited, and she was the one who was praised as the leader in this conversion from gasoline cars to electric cars. So that's because the UAW said, I don't want Elon Musk in the White House. And so it's a lot of these interested parties that say that, no, it doesn't work for me to have someone who's non-union. The reason UAW has been unsuccessful unionizing Tesla's plants is because the people in Tesla's plants are becoming wealthy because they're shareholders in Tesla stock. Same thing for SpaceX. So you can't unionize people if they're doing great where they are. Last year there were 5.8 million people. 5.8 million people applied for jobs at Tesla and SpaceX for 30,000 jobs. 5.8 million people for 30,000 jobs. Tesla might have 150,000 people and SpaceX probably 15,000, but they had 5.8 million. They get the best people. To get the best people who do the best, and how do you take people like that and make them into a union where they're just taking something off the top and it's a job that's not that interesting? A lot of policies that they have I don't agree with. The inclusion policies. I think that if someone is really talented and work really hard, they should get the benefit from that. And the policies of Democrats, if someone's not doing well, they want to say, okay, we'll lift you up. I'm fine about giving people opportunity. I'm not fine about taking something from someone who's worked really hard to achieve what they have and taking it from them and giving it to someone else. This is an advisory role, so I don't think, right now he's doing a lot of advising. I don't know how active he is in choosing the people who are being placed in these roles, but he was supposed to come. We had a funny bit planned. I was telling you about this before. We were initially going to do a Saturday Night Live open.
Here at the Barron Investment Conference today.
Yeah. And then I told him about this. He said, well, why don't we do 30 minutes about talking about the future instead? I said, okay, great. And then they called yesterday and said he can't do it. He's in Mar-a-Lago, can't arrange it, can't leave, can't come in, can't get people in SpaceX told me that he doesn't miss any meetings, so he comes to these meetings. Same thing with Tesla. I don't understand how he's able to do all this.
Yeah, there doesn't seem like there's enough hours in the day.
No, it's amazing what he does. And he lives on airplanes and flies around all over. I don't see how anyone can compete with him the way he works. But I think that. So he says, well, I'm not a spring chicken anymore. He's 53, I guess.
I'm sorry, he says what?
He says, I'm not a spring chicken anymore. He's 53. I'm 81. So he's 53 and he flies all over. And So he, it takes a toll on his body, but boy, he is sharp. He can talk about everything, anything, like William the Great, the Conqueror, just everything. He's so well read, and I guess he must have a photographic memory. He remembers everything. Stock price is the same as it was 3 years ago, so it was higher 3 years ago than it is today, actually. And the way I think about Tesla is I think that so our costs. I met him in 2010. It took 4 years before I became convinced to invest in him. He said, "What took you so long?" And we invested $400 million between 2014 and 2016.
Just in Tesla, or is that
just
everything?
In Tesla.
Just in Tesla.
$400 million in Tesla, 14 to 16, and we made about $6 billion in profit so far. And we sold a quarter of our stock in 2020. 3 years ago, 2021, after it had gone up 20 times. And
there were people who questioned you at the time why you were selling 25%. I think you told us that it was because it had gotten to be such a big part of the portfolio.
Yeah, it was too big. It was 20 and up 20 times. And the idea that I wanted to have is I didn't want people to think that I had died, and that's why they still own the stock. So I wanted to. And by the way, 2014 to 2016, when we invested that $400 million, the stock was acting like a yo-yo. And for the past 3 years, the stock has also been a yo-yo performing stock because what they're doing is that they're reinvesting in their business. They're penalizing current profitability to become a much bigger business in the future. And whenever that happens, so the reason we've outperformed, so I was telling you before, 97% of our assets do better than the indexes, 95%, top 20%. We had $100 million in under management in 1992, 10 million in 1982. Now it's 45 billion, but we've made 49 billion in profits. So we paid people over the past 30 years $4 billion more than we made them, more than they've given us. But we now have 45 billion. I'm hoping that in the next 10 years we can quadruple our assets. So I think that it's right now worth $1 trillion. And what's Bitcoin? $1.7 trillion? So would I rather have 2 Teslas or 1 Bitcoin? So basically, the way I think about it is that Tesla, I think, is going to be worth $3 or $4 trillion, $5 trillion in 10 years, based upon the business plan that I'm aware of. And then Elon believes that longer term, it's going to be worth $30 trillion. It's now being worth $1 trillion.
Do you believe that?
Well, the people from Goldman Sachs were doing something for me. One of the executives in California who's being groomed, I think, to be the next CEO of Goldman Sachs, he and 3 other people from Goldman came to visit me this past summer at my house in East Hampton. And they were telling me, his name is Dan Dees, they were telling me that Elon, Goldman then was struggling to get their business value from 150 billion in the market to 180 billion. So Elon said, "Why don't you come to my plant in Palo Alto where I have Optimus robots? I want you to see what that is." So he says, so we go there, I take the board and we go out. He says, "Ron, it's dystopian. It's amazing. You got to go see this." So I went to see it. And there's robots walking all over. And the idea that he has is that, so here we have, there wouldn't be any EVs without him. There wouldn't be any autonomous driving without him. There wouldn't be any rockets you use over and over without him. We wouldn't have any Starlink without him. So the idea is that this Optimus robots, he thinks is going to be his biggest business ever. And he says everyone's going to have robots. And my big question was, when I was watching these things walking around and how intelligent they're becoming, super intelligent, I said, well, can they procreate? That's the question I have. And how is that going to happen? So I met him in 2010. And it took me 4 years before we began to invest. In 2014 to 2016 is when we bought the stock. We made about 20 times on our investment there. And then in SpaceX, we've been investing in that since 2017. And we're one of the largest investors in SpaceX.
It's not a publicly traded company,
no,
but what about your valuation?
We have about $1.7 billion invested right now. Wow. It cost us $700 million. $400 million of that is me. On Tesla, we have 17.5 million shares, 4.5 million shares is me. So we've been an investor for a long time, so I obviously believe. Mm-hmm. And initially when we invested, it was making me crazy when I was seeing some of the things that he was doing, as much as I admired him. But I do think that, and I calmed myself down, And I said, I really deserve to make a lot of money by investing in this and by staying with it. And we deserve. And what I thought was that what the point that Walter made yesterday was that untethered, these things can happen, and if he was conventional, it would have never happened. So he's the guy who got us electric cars. He's the guy who got us to space. If he was a conventional person, he was in Saturday Night Live, and he said, hey, dude, do you think I'm a normal person? I got you electric cars, and I'm going to take you to Mars. Seriously, am I going to be normal? And he's a very funny, engaging, smart, incredibly hardworking person. And I don't remember. So one story. When I went to a dinner in East Hampton about 2-3 weeks ago, when David Rubenstein was interviewing Walter, and they sat me at the table with Walter right next to the stage, and then David interviewed him, and then they mentioned me 3 or 4 times in that, and then afterwards he said, Ron, the guy knows more than anyone else here about him. Why don't you say something? And I said, I can't say something. This is your show, and I'm not part of that. And
but you're here now, so what would you say?
Well, one fast story is I agree with Walter. He has to be, untethered. And then in addition to that, when he was a child, he talked about all the problems he had with his dad. And he escaped from those. He would go home and he would read the encyclopedia. That was his nickname from his mom, Encyclopedia. And if any question he knew it. So he had a photographic memory. And what amazes me about him now is every time you ask him, how do you do that? How do you know that? How do you know what these things cost? He knows everything. It's a photographic memory. He remembers stuff. And so he's focused on costs, trying to drive costs out of everything. Everyone else tries to make as much money as they can. He's focused on his mission, long term, which is to make planet habitable, and then also to something bad happens to be able to keep humanity alive. To touch Tesla for a second, we're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all these things that are happening in the world that are, they're providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested $250. And he told me that there will never be another investor in our company except for you, if you want to invest. And I'd like to have you as an investor. And so we invested after we studied the land that he owned and what he was planning to do. We invested $25 million. That was at $20 a share. And then when he ultimately went public, he couldn't get 12 people to sit in a room with him. And he went public at $15 or $16 a share or $13 a share. And we invested another $25 million. No, maybe we invested $50 million at 20, and then 20, and then when it came public at 13, invested $7 or $8 million shares, and ultimately the stock went to 150. And so it was down after we invested. It was down 2 or 3 years later, and then people would say, I don't want to invest because there's not going to be a casino for 5 or 6 or 7 years. We invested during that period. We invest all the time when businesses are growing. When Tesla's case, when we invested in 2014, the revenues were less than $3 billion a year, $2.7 billion. This year, the revenues are going to be about $27 billion. So the company has grown 10 times in revenues since the beginning. Then they were sort of struggling and producing cars. And next year, I think they're going to do $35 or $40 billion in revenues. And I think in 2 more years, they're going to do $100 billion. That's because we haven't sold any stock, that's because the shares in Tesla got us. So we talked about investing at $220 or $218. Mm-hmm. It went up to $380, and now it's back to $220, $225 with some self-inflicted wounds. Elon thinks we're going to make 30 times in Tesla. I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Tesla's stock has been tumbling, but that's not the full story. While everyone focuses on the short-term volatility, Ron Barron sees a golden opportunity that others are missing. Tesla is building an empire on the future of autonomous driving, and this is a game changer. With robotaxis on the horizon and a business model set to revolutionize transportation, Tesla's plan is about to redefine the market. So what's really happening behind the scenes? And why is this move set to crush the competition and transform the industry forever?
Tesla is coming off its worst trading day since 2020, falling 15% in yesterday's session. That stock is down now more than 50% from its all-time high that was reached in December. Still, if you're looking for the last year, it's up 25%, so it has been a pretty volatile stock. Joining us right now is longtime Tesla bull Ron Barron. He is Barron Capital's chairman and CEO. He's been, again, a longtime investor, not just in Tesla, but in many other Elon Musk companies. And Ron, thanks for coming in today.
Thanks for inviting me.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When stocks prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything.
Yeah.
I think they might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents, if you're running for election. But you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. Those are the things that we're looking at.
So you're on a buying spree right now?
I didn't say I was in a buying spree. I just said I can't believe how cheap things. I own a lot of things. I'm a long-term investor. It's interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. Mm-hmm. And you were asking him, great shirts he has all the time, I guess. But you were asking him about, what he thought about Tesla. And I said, well, for a 4-week horizon?
Yeah.
A 4-week horizon. So that's his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Tesla is undeniably in a volatile spot in the stock market. A 15% drop in just a single day would make any investor nervous. And with the stock now over 50% off its all-time high, many are questioning the future of the company. But for Ron Barron, a longtime investor and staunch Tesla supporter, these price swings aren't an indication of underlying failure. Instead, they represent an opportunity. Barron's perspective on Tesla is built on a long-term vision, one where temporary fluctuations are just noise in the broader picture. Tesla's market value, in his eyes, doesn't fully reflect the potential locked within the company. While others might see risk in the market's reaction to current events, Barron sees opportunity in Tesla's ability to continue shaping multiple industries. From electric vehicles to energy, and even AI-driven innovations, Tesla is defining them. For investors like Barron, the company's future is clear. As technology advances, so too will Tesla's role as a key player in reshaping the future of mobility, sustainability, and artificial intelligence. This stock price drop is nothing more than a reflection of external forces rather than a fundamental issue within Tesla itself. Barron firmly believes that once the dust settles on current market volatility, the real value of Tesla will shine through. The company has too much going for it in terms of innovation and market positioning to be sidelined by short-term market turbulence.
If you're following Elon's moves and how government policies impact the markets, you need Seeking Alpha. It's my go-to for expert stock analysis to help you stay ahead. Check the link in the description for a special offer. Our channel may earn a commission.
Yeah, but it was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, I invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on, at $1.1 billion. That's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robo-taxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything, but then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a year from now to the fundamentals of the business? Meaning, are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the robotaxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though. First of all, that we're investors in people for the long term. Question everything. Don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years. Own it. We own things. We don't buy and sell things. As far as the fundamentals go, so I want to make sure we talk about other people too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
The major guy. So his business. I mean, you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use over without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that this was a really interesting time to buy because the the software was working. Waymo, when they have cars, you have to have $150,000, $200,000 car. Our car is $35,000 car, and it's software. It's software and cameras, and so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one. So fundamentals, the changes, is that. So historically, what what Tesla did is they built a facility in China. They bought this junky place that was bankrupted by Toyota and General Motors in California, and all the union workers were fired. Hear that, Joe Biden? All the union workers were fired, and then every single one lost their jobs. And then we take over this plant, and they go look at it for the first time after he buys this thing for distressed price. They spent $1 billion on it. It cost us $20 or $30 million to buy it. And then they go to see it, and Elon says, let's go look at this place we bought. And it's a huge facility, 5 million square feet. And they can't get into it. They finally get inside, and they go with one of his friends from college as a director, and they open the door, and they look inside, and it's dark and dismal, and it's drugs and prostitution, and it's crazy stuff inside of that place. And they look around, and it's incredibly dark, and Elon's looking around, and he says, well, what we're going to do is we're going to take off the roof here, we're going to make it all white, and we have the production line running there. And so they learn how to build it. And it was making 400,000 or 500,000 cars a year, 600,000 cars. Then they go out and they build a facility in Shanghai. And it cost them $7 billion to build it for 1 million cars. And that factory was making $15,000 in profit a car. Investing $7 billion, making $15 billion a year. And then price cut after price cut after price cut. Chinese are incredible competitors. I don't understand how American car companies will survive, except for Tesla. And so I'm going too long.
But no. Ron, let me just ask.
But anyway, the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you go into robo cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1.8 million cars. Now all of a sudden you're keeping the cars and making them robo-taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles, will generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding 30 or 40 or 50 billion dollars to 30 or 40 or 50 billion dollars to profits per year for 1 million cars. And so everyone, has to deal with certain clientele, and I deal with the critiques of my clientele for how large the positions are, and if they get very large. I mean, right now, Tesla represents...
It's about 30% in one of the funds.
Well, I think it's around, in the Barron Partners Fund, it's about 12% of the firm assets, and SpaceX is about 9%. So about 20% of our assets. So structure portfolios. That the interesting... So QQQ, Bloomberg, says that there's only two mutual funds in the United States that have beaten QQQ. It's 2,600 in the last 15 years. Barron Partners Fund is number one. Philadelphia Growth Fund is number two, and other 2,600, no one else has come close. So I have shareholders in our mutual funds. And when a position gets real large, like Tesla has become, our cost is $11 or $12 a share, then they say, well, how can you have such a large position? And, I made an exception after we bought as many shares as we did for clients between 14 and 16, and no one else wanted to buy stock, that I went to the board of our funds. I said I wouldn't buy any more stock, but I have to buy this stock. I'm not taking any corporate opportunity. All of the other funds I have already invested, but my deal with you, if you let me do it, and I said I wouldn't, but if you let me do it, then what I'll do is just make Barron Capital financially stronger. I'm buying it for them, not for me. And in addition to that, I'm the last in, I'll be the last out. So I won't sell a single share personally until I sell all the shares for clients. And that's what I've done. So even though we've sold maybe a third of our stock for clients, I have not sold a single share personally.
Ron, do you think the bloom is off the rose at all for the EV transition, or at least for the mandates by whether it's states or the federal government to hasten the transition? And does that matter with Tesla, since there's so many other things?
Once you get to scale, nobody can compete. The Chinese feel that there's only one competitor.
Everyone's going to want electric cars.
Yes, everyone.
Okay.
As we continue, Barron introduces a crucial element of his thinking: the broader economic landscape. He emphasizes that the fluctuations in Tesla's stock price and the market in general are not entirely organic. In his view, government policies, especially those aimed at tackling inflation and recalibrating economic policies, are playing a significant role. These moves, according to Barron, aren't random or accidental. Rather, they are intentional adjustments that are designed to guide the economy toward a more stable future. For Barron, this context helps explain why Tesla's stock has taken such a hit. While others may see it as a sign of trouble, Barron views it through a different lens. Instead of focusing on the immediate effects of inflation and policy changes, he's looking at the long-term trajectory. The reality is that Tesla's innovation, led by Elon Musk, is moving forward at full speed, and the market will eventually catch up with the company's true value. This is where Barron's long-term strategy comes into play. He's not concerned with the ups and downs of the stock price in the short run. What he sees is a company at the forefront of a transformative wave, and in his mind, the next few years will define Tesla's role in the global economy. Whether it's AI, autonomous driving, or the development of sustainable technologies, Tesla is positioned to dominate these spaces. Barron sees the current market dip as an opportunity to double down on Tesla's future, not as a sign to sell. The real game changer, Barron argues, lies in Tesla's business model and Elon Musk's far-reaching vision. For decades, we've been accustomed to the idea of a car as a single, standalone product, one that's sold, owned, and driven by individuals. But Musk's vision is shifting this paradigm completely. Instead of just selling electric vehicles, Tesla is moving toward a model where its cars become part of a larger, revenue-generating infrastructure. Barron touches on Tesla's push into autonomous driving, with the introduction of robotaxis being a focal point of this shift. Tesla's future is about creating a fleet of self-driving cars that can operate autonomously, generating revenue year-round. Barron sees this as the next step in Tesla's evolution from a car company to a full-service transportation provider. Instead of selling cars outright, Tesla will maintain ownership of its vehicles, turning them into revenue-generating assets. The idea of robo-taxis, where each vehicle becomes a mobile, self-sustaining business, could dramatically increase Tesla's profit potential. For Barron, this is where Tesla's true future lies. These robo-taxis will not only provide transportation services to the public, but will also generate significant income for Tesla.
They can't do it. He's in Mar-a-Lago, can't arrange it, can't leave, can't come in, can't get the Jeep. The people in SpaceX told me that he doesn't miss any meetings, so he comes to these meetings, same thing with Tesla. I don't understand how he's able to do all this. It's amazing what he does. But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. Can it be too big? Sure. So I'm always watching, but I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be. Yes. So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so that automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. It's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies, cost them $5,000. We can make a motor for $1,000. If you're making the internal combustion engine cars, I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated, that they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched, and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, show me the incentives and I'll show you how people act. Mm-hmm. And that's the idea, that people, the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that's the reason stock's down.
And when?
Oh, it's going to go up huge. Now is the bottom.
But do you know who else shares in pro-Tesla optimism? That would be today's sponsor, Seeking Alpha. Seeking Alpha is the best pro-Tesla news source on the internet. Click the affiliate link in the description below to get the latest Tesla offering, price targets, innovation, and everything Elon Musk. Link in the description for a very special offer.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to, but overall, until they expect to do 5 million of these new cars. Well, we have a small investment in Cruise, because I wanted to see what they're doing. And Waymo is, their cars are $200,000, $250,000. And they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every night. In California, last Sunday I was in Vail, because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12, they have all this enormous amounts of data, and now they have compute to figure out, humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours, and then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into a parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person, and so we're sitting in the car, and so where do you want to go? I said, I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways, it looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us, there's a stop sign, first car stops, goes, second car stops, goes, we pull up the stop sign, car looks both directions, makes a right-hand turn, just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. They didn't go back. It drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data. If they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500. I want to just make two comments about, number one, how it's the safest car that's ever been built in the world. The safest car ever built in the world. And about a week ago, or 2 weeks ago, or 3 weeks ago, there was a man who took his wife and 2 children, 2 daughters, and drove it off a cliff 250 feet above the ground, and at 71 miles an hour. He was trying to commit suicide and murder at the same time. The car flies off the cliff and tumbles down to the bottom, and the roof on a Tesla is 30 or 40% stronger than any other roof, and the center of gravity is the middle of the car instead of the front of the car. And it rolls down to the bottom of the hill, and everyone's looking down, and then they lower people down, and they open the doors, and people just sitting there. They were fine. Yeah, so unhurt. And so I told Elon he has to text about this and tell people that if they want to commit suicide, they should not be driving a Tesla. They should drive, a Bentley. Drive a Bentley, drive it up the cliff, you'll die. Don't do it in a Tesla. So number one, the safest car ever been built. And of course he tweeted about that. Number 2, Toyota. So Michael Barron, my son, and I went to visit Toyota in Japan a couple months ago. And we were meeting with an executive, and we had a translator with us because we don't speak Japanese. That guy did speak English. And so we started asking him questions, and initially it starts off, he's responding in answering my questions in English, and then all of a sudden he switches to Japanese. And it happens every time there's a type of question. He starts off with English and then goes to Japanese. And I finally say, listen, I can't have a conversation with you when you have a translator and I'm listening to this translator. I got to talk to you in English. And so it was nothing. And then we walk out, and this whole strategy behind Toyota was they are negative about electric cars.
Right.
And what he wanted to do is he said, we want to have the lowest cost of mobility in the whole world. And so as a result of that, rich people, they can plug in their cars. If you're a lot of places, there's not electricity, so you can't plug it in. So we're not into that. That was what we took away. So we walk out and I said, Michael, I don't understand any strategy that they have here. This reminds me sort of of Sony in the 1970s. You know, they're just stuck in their ways. But I don't know. We never heard the strategy. And he said, Dad, I've never been more bullish about Tesla. And what do you know? The head of Toyota just retired yesterday or the day before, last week. He's the grandson of the founder. And he says, I'm too old for doing this. He was 65. I'm 79. So basically, he says, I'm too old for doing this. The bottom line is that the head of Volkswagen gets fired. The head of Ford, Mark Field, gets fired because they had bad strategies, bad people. And Mark Field came to visit me a few years ago. You couldn't have believed the negative things he told me about Elon Musk. All wrong. And just, he had a bad strategy, not a great executive. Okay, I shouldn't say that. All right, good guy.
Details on OpenAI's deal to build one of the world's largest AI data centers in Abu Dhabi. Sources telling CNBC's Kate Rooney that Elon Musk worked to try to stop that deal if it didn't include his own AI startup, XAI.
What do you think about, like, when Elon was calling for a pause on AI?
I mean, he was like starting an AGI company while he was doing that.
Yeah. So didn't he start it like after he was calling for the pause?
I think before, but I don't remember. In any case,
is it one of those you can't beat him, join him things?
I think the instinct of saying, like, we've really got to figure out how to make this safe and good and, like, widely good is really important. But I think calling for a pause is, like, naive at best.
So I was sitting at the dinner with Macron. So it was Macron, it was J.D. Vance, and it was Sam Altman. Frankly, I think Elon was a little jealous that Sam Altman was sitting next to J.D. Vance, and it wasn't him. And because it was right around the time that Sam Altman was speaking that he announced it. And frankly, I thought Sam's tweet response, part of it was pretty good. I would have probably said, instead of whatever he said about 9 billion, I would have said, yeah, I'm going to take Twitter public at $420 a share. It was attention grabbing, right? Some people can't stand to not be getting attention.
The battle for the future of artificial intelligence is a clash of ideologies, a fight for the very soul of what AI should be. And at the heart of this explosive drama, two billionaires, each with a vision for AI that couldn't be more different. On one side, you have Elon Musk, the relentless innovator and tech disruptor, the man who's been reshaping industries for decades. On the other, you have Sam Altman, the CEO of OpenAI, who's become the gatekeeper of one of the most powerful technologies humanity has ever known. This is a story of vision, trust, and control, and at stake is nothing less than who will own the future of AI. Musk is making moves that could flip everything we thought we knew about AI, and his latest play? A $97 billion bid to take over OpenAI, the very company he helped create. But here's the kicker. Altman made it clear. OpenAI is not for sale. So why the offer? What's behind Musk's sudden push to seize control? Is this just a billionaire power play, an attempt to slow down a competitor? Or does Musk truly believe that OpenAI has strayed from its original mission? Musk's frustration is palpable. He believes OpenAI has veered off course, morphing from its non-profit roots into a profit-driven juggernaut. In Musk's eyes, this is about preserving the mission to ensure AI doesn't become a weapon of the few. And if Musk has his way, he'll tear down the walls of secrecy and profit-driven agendas to create an AI that's open, safe, and accessible to everyone. But let's not kid ourselves. This is about trust. Sam Altman may have once stood shoulder to shoulder with Musk as they co-founded OpenAI, but the cracks have been widening for years. Musk's vision of an open, transparent AI world doesn't align with Altman's increasingly corporate-driven OpenAI, which is more focused on scaling rapidly, securing funding, and positioning itself for long-term dominance. This shift from non-profit to a hybrid for-profit model hasn't just raised eyebrows, it's turned the company's very identity on its head. Musk wants to put the brakes on that, but Altman? He's accelerating forward, convinced that the company needs the freedom to grow and evolve, even if it means embracing profit. And let's not forget the stakes here. What happens if Musk pulls this off? If he successfully takes control of OpenAI, dismantles its current structure, and builds a rival, we might be looking at a complete upheaval in the AI world. AI development could become more transparent, safer, and more accessible. But that's a big if. Musk has never been shy about taking risks, but is he really prepared to handle the immense power that comes with controlling such a force? And if he doesn't succeed, if Altman holds onto the reins and steers OpenAI down its current path, what does that mean for the future? Does it mean we're handing the keys to the most powerful technology in human history to a single company? And by extension, one individual's vision of how AI should be developed? Sam Altman insists that OpenAI's mission hasn't changed, but the reality is, things are different. OpenAI may have started as a non-profit, a dream to create AI for the good of humanity. But now, it's a multi-billion-dollar empire where the lines between mission-driven idealism and capitalistic ambition are becoming harder and harder to distinguish. Altman may have started OpenAI with a noble goal, but as he steers it into the realm of profit, the question arises: can we trust him with the future of AI? Is he still the right person to protect us from the very risks he once warned about? So buckle up, because this battle is far from over. Whether it's Musk's vision of an open, regulated AI world, or Altman's quest to lead OpenAI into the future, the stakes have never been higher. And whichever side you're on, there's no denying that this is one race we can't afford to lose.
OpenAI, I mean, you seem somewhat frustrated with them. You were one of the big contributors early on.
The reason I am the reason OpenAI exists.
How much money did you give them?
I'm not sure the exact number, but it's some number on the order of $50 million. Man, fate loves irony next level.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's like a happy person. I do feel for him.
Elon Musk is part of an investor group trying to buy OpenAI, the parent company of the popular chat GPT service. Musk is leading a group of investors who have made a bid to buy OpenAI for nearly $100 billion. But Sam Altman, the CEO of OpenAI, says there's just one problem.
OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor.
The backstory here is key, right? Musk actually co-founded OpenAI back in 2015, but he has feuded with Sam Altman ever since then over OpenAI's plans to convert from a non-profit to a for-profit company.
Something is boiling beneath the surface of Silicon Valley. Elon Musk is suing the very company he co-founded. Sam Altman, the man currently running that company, is in the spotlight, answering questions, dodging accusations, and subtly firing back. But this isn't just another tech feud. This is a power struggle over who controls the future of artificial intelligence. Because if Elon Musk gets his way, if he dismantles OpenAI, builds a rival, or reclaims the narrative, it might just flip the script on everything we thought we knew about AI, safety, and control. But if he doesn't, if Altman keeps the wheel and pushes forward without brakes or oversight, then yes, we might really be screwed. This is about how power shifts when the most advanced intelligence ever created lands in human hands, and whether we've put it in the right ones.
One of the other questions, and it is Elon related, is you are now moving towards having a for-profit component part of your business. Right now it's a not-for-profit. And he, as everybody knows, if you read the papers, is suing you over this and many other things. How do you feel? I actually just want to ask you on a very personal level, forgetting about even the merits of the case. As a guy who has spent a lot of time with him and you guys founded this thing together, how do you feel personally today about all this? Just as a human.
Tremendously sad. I grew up with Elon as like a mega hero.
I thought what Elon was doing was absolutely incredible for the world. And I'm still, of course, I have different feelings about him now, but I'm still glad he exists. And not just because, no, I mean that genuinely, not just because I think his companies are awesome, which I do think, but because I think he, at a time when most of the world was not thinking very ambitiously, he pushed a lot of people, me included, to think much more ambitiously. And I'm grateful is the wrong kind of word, but I'm thankful, I'm positive about that. We started OpenAI together, and then at some point he totally lost faith in OpenAI and decided to go his own way, and that's fine too, but I think of Elon as a builder and someone who, known thing about Elon, he really cares about being the guy. But I think of him as someone that if he's not, that just competes in the market and in technology and whatever else, and doesn't resort to lawfare. And, whatever the stated complaint is, what I believe is he's just he's a competitor and we're doing well. And that's sad to see.
How concerned is Sam Altman about annihilation, do you think?
I think in reality he's not concerned about it. I don't trust OpenAI. I started that company as a non-profit open source.
Yes.
The open in OpenAI, I named the company.
Yeah.
OpenAI as an open source, and it is now extremely closed source and maximizing profit. I don't understand how you actually go from being an open source non-profit to a closed source for maximum profit organization.
Let me ask you a different question just about the company. You did start it as a not-for-profit. It was a research outfit originally.
Yeah.
Now, I think there's a view that it has to shift to be some kind of profit-oriented company.
Well,
does it have to?
First of all, I'd like to talk about the reason we started as a nonprofit, because I think it sort of speaks to the answer too. When we started, we did not have any idea that we were going to be a product company. We also did not know that the amount of capital we needed would turn out to be so huge. If we did know those things, we would have picked a different structure. It's hard to overstate, because it wasn't that long ago on the calendar, but it's hard to overstate how different 2016 was. This was years before we had the research that led to language models. This was 4.5 years before we launched our first product. This was 6.5 years before we launched ChatGPT. All we knew that we wanted to do was do some AI research, and that we thought AGI and superintelligence eventually would be this important thing to the world. And we wanted to somehow do something that would be good. At the time we were working on writing papers, new RL algorithms, new theories, a way to play video games, a robotic hand, and it was not clear that there would ever be a product or revenue stream at all. And it wasn't clear that we were going to need one, because it wasn't clear we needed so much money.
Right.
It became clear after GPT-1 and some other work that we were going to need to scale. And we started, and also Elon decided to stop funding us as a nonprofit, and we couldn't get somebody else to do it, that we needed to find a way to make a capped profit. Now, we wanted to keep going with a lot of the things that we think are good about a nonprofit, and so we had this subsidiary capped profit that worked for a while.
We start with a question that cuts straight to the core. How do you feel about Elon Musk suing you? Sam Altman doesn't flinch. But what he gives us isn't a corporate answer. It's something more personal, more conflicted. He talks about idolizing Elon, seeing him as a hero. Not a mentor, not a colleague, a hero. That's worship-level admiration. And when someone you revere becomes your legal opponent, that's grief. But let's step back. Why does this matter? Because it exposes the emotional rot under the surface of OpenAI. A company born from big, idealistic dreams, co-founded by people who believed they could steer the most powerful technology on Earth, fractured into lawsuits and counterclaims. When Sam says Elon lost faith in OpenAI, he makes it sound like a bad breakup. But really, it's the story of two visions diverging. Elon wanted AI to be open source, safe, shared. Sam saw a different path, one that required capital, scaling, and eventually, control. And that control is exactly what Elon is afraid of. Elon's fear isn't new. He's warned for years about AI becoming humanity's last invention, especially if it's wielded by the wrong people. So when he sees Sam leading a company that's both secretive and profitable, he sounds the alarm. I don't trust OpenAI. This is the kind of institutional breakdown that could define the next decade. The very people who were supposed to protect us from runaway AI can't even trust each other. And while they trade jabs in interviews and court filings, the technology keeps evolving, faster, smarter, scarier. So what happens if Elon decides to launch his own AI, built from scratch and engineered to outcompete OpenAI? Well, if he's right, if Sam really can't be trusted, then that move might be the only thing that keeps us from handing the keys to the kingdom over to a single private empire. But if Elon's wrong, then we're in a global arms race of egos, not ethics. And in that kind of race, no one wins.
Meantime, this new chapter in the battle of the tech billionaires, Sam Altman rejecting that $97.4 billion bid by an Elon Musk-led group looking to take control of OpenAI. CNBC's Arjun Karpal caught up with Altman at this AI conference this morning in Paris, which is the locus of pretty much all global attention today. Hey, Arjun.
Hey, good morning, Carl. And look, one of the things and the rationales behind the deal from Elon Musk, which is very important, is he thinks OpenAI has strayed from its goal to create AI that benefits humanity, and that's why he says he's put in his bid. But what does Sam Altman, the CEO of OpenAI, thinks? This was amongst the questions I put to him. Why do you think Musk is putting a bid in now? Let's listen into what he had to say. Musk bid for OpenAI?
Yeah.
How seriously are you taking it?
Not particularly.
Not particularly. Why do you think he's doing this?
To slow down a competitor.
And Stargate? Do you have the funding?
I'm not the one who tweeted funding secured. I just actually try to show up and, build the thing.
Sam, just a quick one.
What's the end game, Mr. Rome? What is the end game for Elon Musk?
I don't know. I'm curious.
Yeah.
I think it's to slow down a competitor and try to catch up with his thing, but I don't really know.
Yeah, but you know well, right?
To the degree anybody does, yeah.
Just when you think the rift couldn't get any deeper, Sam throws down a new card, publicly. In a short clip, he's asked how seriously he takes Elon's bid for OpenAI. His response? Not particularly. That sounds casual, but make no mistake, it's strategic. He's not just downplaying Elon, he's exposing him. Altman claims Elon is trying to slow down a competitor, not protect the world, not champion ethics, but stall the progress of a rival he can't keep up with. And then comes the snark. I'm not the one who tweeted funding secured. That's a shot across the bow. A dig at Elon's infamous SEC battle. What this shows is critical. The gloves are off. This is about undermining each other publicly, damaging reputations, and taking the AI race into the mud. And Sam's final word? I don't really know what Elon's endgame is. That's casting doubt. It's Sam planting the idea that maybe Elon doesn't even have a master plan. Just a grudge and a need to stay relevant in a space he helped ignite, but no longer controls. This isn't a chess match, it's a street fight. And at this point, neither side is pretending otherwise.
And in some senses still does kind of work, and in some other senses is like straining the theory of what a nonprofit controlled org can be and the amount of capital we need at this next stage. So we are, and have been for a while, looking at some changes. Nothing is decided. It is, as you can imagine, like very complicated to figure this out. And the board is like hard at work on it. In any configuration, like the nonprofit doesn't go away. Like one thing that the board has looked at, for example, is a PBC that a nonprofit owns a huge chunk of and then figures out how to use that amount of wealth for the purpose of the nonprofit. There's other ideas too.
One of the things I've always been fascinated by is you never took equity in the company.
I think you think about that more than I do.
I'm surprised. You get paid $76,000, I looked.
I believe you.
And that's it. If the company does have one of these moments, there's an expectation you will get some equity.
There was much of press about that, and there's been like some investor pressure. It is weird that I didn't get equity.
Did you want it? You didn't want it?
No, I didn't want it. If I could go back in time, I would have taken it, just some little bit, just to never have to answer this question. And no matter how many times I try to explain to people, like, I have the most interesting, coolest job in the world. This is like my retirement dream way to spend my time after like what was a pretty good career. And people can work on like art projects and not get paid for that, and no one thinks it's weird or whatever. It just does not come across. So I wish I had taken some. I don't imagine I would work any harder or less hard. There would be like, I think, something clearer about the alignment I would have had with investors or whatever else, and it definitely would have been easier to raise money. Like there are plenty of investors who have not invested because I didn't take equity.
They say, really, that's interesting. They will not invest because you don't have equity.
Come up a few times, yeah.
So if it's now the company's $157 billion, what do you think is a good number for yourself if it happens?
Again, I think you think about it more. This is my childhood dream job. Like, not every day, like not day to day. I would rather not, like, be beating my head against the wall all the time. But getting to work on AGI and like getting to like sit in the room with the smartest researchers in the world and go on this crazy adventure, like, that is what I always wanted to do. That was like my literal childhood dream. And that is, all of the weirdness aside, I think it should at least be understandable that is worth more to me than any additional money.
Well, but Sam Altman got rich, didn't he?
At various points, he's claimed not to be getting rich, but he's claimed many things that were false. And now apparently he's going to get $10 billion of stock or something like that. So I don't trust Sam Altman, and I don't think we want to have the most powerful AI in the world controlled by someone who is not trustworthy. And sorry, I just don't. I mean,
but that seems like a fair concern.
Yeah.
But you don't think, as someone who knows him and has dealt with him, that he is worried about the possibility this could get out of control and hurt people?
He will say those words, yeah, but no.
The next few minutes of the interview drop harder than most people realize. Sam opens up about OpenAI's nonprofit roots, and it's clear they weren't built for scale. In 2016, they weren't chasing a product. They were publishing research, tinkering with algorithms, teaching robotic hands to solve Rubik's cubes. It was science for science's sake. But then came GPT. Then came scaling. Then came the money. Sam admits, if we knew how much capital we'd need, we would have chosen a different structure. That line hits like a time bomb, because it reframes OpenAI not as a mission-led organization adapting to growth, but as a non-profit that stumbled into capitalism and never looked back. That's where the rot begins. From the outside, OpenAI still talks like a non-profit. They emphasize safety, alignment, and global benefit. But internally, they're bending structures, creating hybrid for-profit caps, exploring public benefit corporations, all to make the numbers work. And here's the catch. If you need that much capital to benefit humanity, maybe you're not building something for humanity anymore. Maybe you're building a business and trying to dress it up like a cause. Then comes the kicker. Sam never took equity. He makes $76,000 a year. To most people, that sounds noble. But to investors, it sounds suspicious. In a world where incentives drive everything, where billions are on the line, refusing to take equity means your motivations become harder to read. Are you a martyr? A puppet? A wild card? Sam says he regrets not taking a little equity. Not for the money, but to shut people up. That's honest. Maybe too honest. Because it shows how badly OpenAI wants to appear principled, even as it gets entangled in capitalism's oldest trap, trust. And then, boom, we return to Elon's voice. I don't trust Sam Altman. He doesn't believe Sam tells the truth. He doesn't believe Sam is worried about AI safety. He doesn't believe the man who helped build OpenAI should be allowed anywhere near the most powerful system on Earth. That's a red flag. Because the moment trust breaks down, not just between co-founders, but between creators and the public, AI ceases to be a tool. It becomes a weapon. And in Elon's eyes, Sam Altman is already pulling the trigger.
All right, right now, a rivalry between big tech billionaires playing out as we speak. We're talking about Elon Musk and OpenAI CEO Sam Altman. Altman firing back after a Musk-led group submitted an unsolicited $97.4 billion bid to take over OpenAI. Take a listen.
Sam, should you have taken Elon's offer?
You refused $1 billion for Elon Musk. What do you want to say to Elon Musk?
Receive what from him?
Almost $100 billion, right?
The company is not for sale, neither is the mission. We're happy to buy Twitter if you can talk about that.
Wow, okay. Altman made that same message in a post to X, saying he'll buy Twitter for just $9.74 billion.
Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. it's, he's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff, now this, and we'll try to just put our head down and keep working.
Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing into anything or going anywhere. I mean, whether they did or didn't, they built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the US presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I mean, I try to just wake up and think about how we're going to make our technology better.
Sam Altman with Tom McKenzie in Paris. We go to London now. When they walked me in the room and they said, we got a fun thing for you to do. Own YouTube. The first book I read, comment, subscribe by Mark Bergen, cover to cover, inside YouTube's chaotic rise to world domination. Observing OpenAI in Paris is Bergen in London. Mark, what does Macron want out of this? What do European leaders want out of an AI soiree in Paris?
I think they want, in some ways, what they want people like Sam Altman there. He probably wanted Elon Musk there as well. They want big headline numbers, right? Macron kind of gave his version of the Project Stargate. He said 109 billion euros of investment. If you look at the finer points there's a lot of details yet to be filled in, and some of those are over a massive timeline. But I think they want to be seen as relevant, right? I mean, we had the end of that conversation between Tom and Sam Altman about DeepSeek. It's US, it's China. Europe is left out in those conversations.
Mark, on the subject of DeepSeek, which I imagine is looming large over this gathering in Paris, there was a bit of happy talk there from Sam Altman about the fact that all of these different AI companies building their models are going to learn from each other. But as you and our colleagues have reported here, there is some, shall I say, skepticism about the way in which this Chinese company has fashioned this model. What's the latest on that as we kind of learn more about it and how it was fashioned and indeed how much it costs to do?
Yeah, I actually think they were more candid this week than I expected. We saw Demis Hassabis, who runs DeepMind and Google's AI efforts, basically telling us on TV yesterday, I think the cost that DeepMind, that 6 million figure that they use to train their models, he said it's exaggerated. He basically called BS on it. And we had Chris Lehane, who runs policy for OpenAI, saying that we've been talking with government officials about this possibility that they distilled or use unauthorized access to OpenAI data. And so basically built this model right on the shoulders of OpenAI.
Mark, unfair question, but let's finish with this. How does Microsoft arc over this tension of Musk and Altman? What does Microsoft want out of this?
It's a good question. I mean, in some ways, Microsoft's kind of the winner as long as people keep buying their cloud services. And I think, it seems like what Musk has thrown a little bit is a wrench between the close relationship with Microsoft and OpenAI. I believe even since after his lawsuit, they've kind of backed away from that. There's some reporting that they're not as close as they were. But, in the long run here, Microsoft wants more companies spending on chips, more companies spending on cloud compute. And I think they're fine to let this lawsuit.
It is the app that is revolutionizing the tech world and beyond. ChatGPT is one of the fastest growing apps on the market. It's AI assistant helping users solve problems both big and small, and leading investors to dream of the wild and lucrative possibilities of artificial intelligence.
They're spending tens of billions of dollars every few months in order to make artificial intelligence really happen and become mainstream.
But its parent company OpenAI's rapid growth, the subsequent injection of investor cash from several different sources, coupled with co-founder Sam Altman's desire to make the company a for-profit entity, has led his former partner Elon Musk to revolt. Musk has filed a lawsuit to slow or outright block the company's transformation. And now he's taking that feud a step further, offering close to $100 billion to take control of the company. A bid Altman didn't ask for and immediately rejected. No thank you, but we'll buy Twitter for $9.74 billion. A subtle shot at Musk, who bought the social media platform for $44 billion. Musk returned fire, calling Altman Scam Altman and a swindler. Musk's bid to take control of OpenAI comes at the same time he's enjoyed immense influence over the Trump White House.
I've had a great help with Elon Musk, who's been terrific.
But Trump has not been afraid to keep Altman close, hosting him at the White House to announce a $100 billion investment in AI infrastructure across the U.S.
We wouldn't be able to do this without you, Mr. President.
A rivalry that Trump seems to be willing to encourage.
These two men, while they're rivals and big competitors and former business partners, they're also fighting for the affections of the President of the United States.
And in his offer to buy OpenAI, Musk's attorney promises the billionaire will return the company back to its core mission with a pledge to make it open source, nonprofit, and a, quote, safety-focused force for good that it once was.
So here's where we are. One man is building what may become the most advanced artificial intelligence platform in history. The other is trying to stop him. Not with algorithms, but with a lawsuit. And both of them helped create this storm. If Elon Musk makes this happen, if he creates a competing AI that's open, regulated, and accessible, he could flip the AI race on its head and expose just how fragile OpenAI's structure really is. But if he fails? If the lawsuit goes nowhere and OpenAI doubles down on control? Then Sam Altman becomes the de facto steward of the most powerful technology we've ever known. And that means whether or not we trust him, we're all along for the ride. So yeah, we are screwed might not be hyperbole. It might just be the understatement of the year. So, Apple just called out OpenAI and the entire AI industry without even raising their voice. While everyone else is hyping up how smart these models are, Apple quietly dropped a study that basically asks, are these systems actually thinking, or are they just really good at faking it? We've all seen those step-by-step answers in tools like ChatGPT or Claude, where it looks like the AI is solving problems in real time. Turns out, that might not be real reasoning at all. According to Apple's research, when the puzzles get tough, even the best models break down, and not just a little. We're talking complete collapse. They tested models like Claude, DeepSeek, and OpenAI's own, and what they found was kind of brutal. In this video, we're breaking down what Apple actually discovered, why it matters, and whether these so-called intelligent systems are truly reasoning or just putting on a show. Let's get into it.
Apple researchers now raising red flags that may be hard for the AI trade to ignore. In a new paper, they're throwing cold water on the growing trend of reasoning models and whether they're really more accurate. Deirdre Bosa has more in today's Tech Check. Please explain, Deirdre.
I will. So in doing this, Apple is essentially calling out not just a growing, but the biggest trend in AI right now, and that is reasoning, the ability of models to try and think like humans. Now, these models are everywhere. OpenAI, Google, Anthropic, they are all racing to build AI that doesn't just spit out answers, but shows its work step by step, promising more reliable and logical responses. But Apple scientists, they're now saying that beyond a certain point, it just doesn't work. Not only do these models struggle with harder problems, but they actually get worse as the task gets more complex and they waste computing power overthinking simple tasks. Here's an example from the paper. Now the AI, it's playing a simple version of checkers, swapping pieces from one side to the other. It starts easy, but the more pieces you add, the harder it gets. It's a logical puzzle. This chart shows how well AI models handle the puzzle as it gets harder. At first they're accurate, but at around 8 to 10 pieces, everything just collapses. Even the most advanced reasoning models, they break down. So put simply, thinking harder doesn't make these models any smarter. It just makes them slower, less reliable, and importantly, more expensive expensive too. They're burning through compute power. So what does this all mean for investors and the AI trade at large? Well, some see this as Apple moving the goalposts, shifting the conversation because it's late to AI. But similar findings are coming from other labs too, including Anthropic and Leap, a Chinese AI research group. And they raise big questions. Is the industry chasing the wrong kind of intelligence? And so are companies like OpenAI and Google just burning through expensive compute to make these models look smart without actually getting any better. The AI boom so far, guys, you know this well, it's been about scale. But this newer narrative, which is certainly gaining momentum, that could continue to shift the focus to efficiency, and it could make investors question once again whether all this spending is actually paying off. We've seen the AI trade take off once again over the last month. But remember, these are similar doubts that stalled the AI trade earlier this year after DeepSeek's breakthrough. It was all about efficiency and ROI. Could also help explain why Apple isn't jumping into AI the same way that others are, because culturally, Apple is very hesitant to release products that aren't perfect. And this paper really shows and proves that these new reasoning models are far from perfect.
So they're not getting smarter?
Not after a certain point. So when you think about simple logical tests, yes. But when it goes into the more complex ones, they're not. They're actually just burning compute power. And the word too that I hear a lot from sources, CEOs, founders that I talk to in AI is generalization, right? What do you do with an AI model if it's very good at math and science and sort of logical problems up to a certain point, but they can't generalize? That could make the idea of agents, right? Another buzzword, something that Apple has wanted to integrate into the iPhone, much further off. That we're not going to get that. We're not going to get that killer app, that killer use case beyond a chatbot for some time.
So you think, Dee, it's a reflection of Apple's habit over the years of not overpromising? I mean, certainly that was the case with an Apple television and an Apple car. Right. We can go through a couple other case studies.
It may be. It could be a convenient excuse, which is what some critics say. But like you said, Carl, we know that Apple wants to get things perfect. This shows that it's not perfect yet. So maybe it's hesitating, but it could also help explain why Apple hasn't spent the same kind of billions and billions of dollars in CapEx that others have. It's sort of taking a step back, watching this efficiency race play out before jumping into sort of these bigger models that at the end of the day may not actually be smarter.
I love how deep you go, Deirdre. Thank you very much, Deirdre Bosa, which is a good preview because Apple's a big story this afternoon, but also importantly for Apple, so are the trade talks between U.S. and China happening in London.
So here's what's happening. A lot of new AI models, especially the ones claiming to be smarter, more advanced, or human-like, are starting to show their work. They don't just give you an answer, they give you their reasoning step by step. This technique is called chain of thought prompting, and it's supposed to simulate how a person would think through a problem. If you ask it a math question, it might walk you through the logic. First, we subtract x from y, then we divide, all the way to the final answer. Visually and structurally, it looks like thinking. But here's the catch. Nobody really questioned whether those steps were accurate. Everyone was focused on whether the final answer was right. That's like seeing someone get the right answer on a test and assuming they understood the topic, without checking if they cheated, guessed, or copied someone else's work. Just because it looks like logical thought doesn't mean it actually is. This illusion is what Apple set out to test. They weren't satisfied with just getting the right answer. They wanted to know, is the model actually reasoning its way there, or is it just mimicking patterns from its training data that look like reasoning? This is a subtle but critical distinction, because if the steps are fake or just stitched together from memorized bits, it means the AI isn't actually understanding anything. It's faking the act of thinking. That's not a small problem. The entire pitch behind these new models is that they're more intelligent, that they can solve harder problems, handle more responsibility, and even assist with scientific discovery. But if the process behind their answers is flawed, then we're building an entire generation of tools on a foundation that might be cracked.
And the biggest thing is they were blindsided when generative AI with ChatGPT and GitHub launched back in 2022, November 2022. I'm told Apple Intelligence wasn't even an idea back then.
Why?
Well, they missed the boat.
But how? I mean, I don't understand. Yeah.
Well, clearly there was philosophical disagreement and philosophical disinterest in the topic of artificial intelligence. I write about how Craig Federighi, Apple's senior VP of software engineering, doesn't really believe in these multi-billion-dollar projects. He tends to try to shut down or steer away from projects of that sort, and AI is something of that nature. AI is quite a bit messy. They're known for their very intricate and well-designed user experiences. AI sometimes with hallucinations can take away from that, but I think they didn't think it was going to be as big of a thing as it became today. A lot of it fell on deaf ears years ago, I'm told. But really, this is a company that's known for updating their operating systems once a year. It's known as a company that focuses on the minutia, and they missed the big picture here with artificial intelligence, and it really is a shame. You know, the big picture here isn't the AI capabilities of its devices today. The big picture today is the AI capability of future hardware. If you don't have the core technology, the AI ready to go at a deep level, how are you going to develop products like humanoid robots, smart glasses, watches and AirPods with depth sensing cameras for AI purposes? Can't do any of that if you don't have that technology. So they need to seriously turn this thing around quickly, or they're going to be in big trouble. This is as core a technology as the touchscreen.
Wow. I mean, first of all, how many words is this story, dude?
6,000.
Yeah, this is a long, well in-depth story, folks. So if you want to get smart on AI and Apple, you got to read this story. It's in the Bloomberg Business Week. It's on the Terminal. I'm sure it's everywhere else as well. Mark, what can they do? If I'm an investor, that's the only question I have for Tim Cook. Can you guys catch up and get some of that AI pixie dust in your stock?
Yes, they need to make acquisitions, and they need to up the percentage of that R&D budget tied to AI. They need to up that percentage. They need to allocate more of their hires to AI as well. So they need to go big or go home on this. And I think...
Do they know that, do you think?
Yeah, of course they know that.
Okay.
How do they go big?
You got to spend more money. AI is really one of the only things that you can buy your way into when it comes to this technology, right? You can buy your way into it. You just need to throw billions and billions at AI training. They need to make probably some tweaks to their privacy policy, right? They have so many devices. They have more devices than anyone else as a single brand of a hardware company, of any company in the entire world, in the history of the world. But they don't leverage that because of their privacy stance. So maybe make some tweaks there to be able to collect some more data, maybe figure out a way to convince people to give up some of their data for this purpose. And I think that could go a long way for them. So spending money, collecting more data.
Is there somebody out there that they could buy, should buy, that would leapfrog them, do you think?
They hate doing that though, right?
Well, the problem is this philosophical disgust, I would say, to making these large acquisitions. If I told you, I mean, you know this is true, so maybe you're not a good example, but if I said to someone who didn't know the company as well as you two, would you believe me if I told you that Apple's biggest acquisition in the history of the company was $3 billion?
I actually believe that.
Well, you believe that because you know that. But I think if you ask people who didn't know that, that would be completely unbelievable. They make these small acquisitions. And in addition to not wanting to spend big bucks on a company, they're really poor at integrating companies. The Beats integration, integrating all those engineers into the company, disaster. Intel, they bought the modem unit for $1 billion back in 19, disaster. What is it going to feel as an AI person at Apple today if the company buys your replacement to bring them in? It's not going to be fun. There's enough turf wars as it is at Apple. So
if they do then have to do it internally, they've still not done well at that.
They've got to do both. They got to make the acquisition. They got to just deal with that. They got to make their biggest acquisition ever, and it has to be for AI, maybe multiple acquisitions. They have to turn things up a notch internally as well. They're going to be making changes. I mean, there's so many philosophical disagreements. The biggest is about chatbots when it comes to AI. They are allergic to AI chatbots. They don't like the technology. They don't think OpenAI has staying power. So yes, I know.
I made a face when he said that, by the way. Okay.
You're going to see deeper integrations with other companies. You're going to see Google Gemini integration. I think next year you'll see Perplexity integration, maybe some Anthropic integration, maybe some Microsoft integration, but they're going to keep pushing, and this is going to be a multi-year thing. The biggest problem is they were caught off guard when this happened, so they had no head start on this. They're coming way from behind.
Now, my next guest has been a fan of Astera Labs for some time now. In fact, she introduced us to this stock a while back. Spirit Leads investor, founder, chief investment officer, Ivana Dalevska. Ivana, now, are you happy with what you just heard from the CEO?
Absolutely, Charles. So thanks for having me. We really like Astera Labs here, especially post this pullback. I think many investors don't understand exactly what the company does, which is why you see this more violent volatility and swings. But if you can find good entry points, this is a really good company to own for the long term.
Some of the things that you talked about of being a pure play. I like this part. Several products have 100% market share right now.
That's right, Charles. So the PCIe Express that you mentioned earlier and the CEO referred to has close to 95% market share. So when you talk about competition with Broadcom and other players, everybody is working on different parts of the value chain. So they're not necessarily competing with each other. So they have a very strong market share in this particular product. And then the Leo and Scorpio, those will be products that will ramp in the second half of this year and more in 2026. So
it sounded like he's got a great relationship with his customers, but it sounded like it wasn't a lot of customers. You talk about customer expansion.
That's right. So a lot of these products are brand new things. So they first started with NVIDIA on the PCIe Express retimers, right? And then they're expanding further into other customers. So we think that now their number 2 customers is approaching the size of NVIDIA, and number 3 is not too far behind. So as they expand the customer base, you're going to see a lot more stable earnings rather than what we've seen.
I got to ask you about this. I asked him about this Apple paper I saw over the weekend. It got a lot of traction, right? Essentially boils down to maybe this whole AI thing. At the moment, it's just mostly smoke and mirrors. What do you say about that?
Well, I think it's a very interesting thing, this concept of thinking AI. I think we're very far from the point where AI can think. We're going to have to deploy significantly more GPUs to get to that point. We are at a point where...
Is that AGI or ASI?
Well, it's actually like this would just be the second layer of iterative AI. So it's really like step 1 was generative AI, where like you prompt ChatGPT and it gives you a reply. Now it just does few more iteration, which is what's really used in the agentic AI models. But to get to like where AI can reason, like the AGI or one of those more advanced stages, I think we're at like 10 years, really? 10 years behind.
So rest comfortably. It may take our job, but it won't. It will still need us around.
Exactly. It really works side by side to humans, and the new things that you're going to see introduced over the next 6 months is really going to be how they're going to help you do better, be better
Thanks
at
for
your
watching.
job.
If you want more in-depth breakdowns on the AI war, tech drama, and what's coming next, make sure to like, comment, and subscribe. The future is coming fast, and it doesn't care if we're ready.